All right, we're back with you here on the Market Day Report. I'm Arlen Bowling, and want to go back and catch a couple of things. Now, on the soybeans, I just want to remind you, we did have an overnight sale reported from USDA last night. 119,000 tons of soybeans sold to China for the upcoming marketing year, 2016 and 2017. So don't forget about that. That should help to buoy the soybean trade a little bit. Todd was talking earlier about the outside markets here and the U.S. dollar. Now, when we started the program early this morning, it was way over 1,000 points lower. And it has firmed up a bit since then, but still a lot of pressure in the dollar. We have September U.S. dollar index futures down 650 points at 94.940, and December is down 650 points as well at 94.890. Todd, explain again what it is that was really collapsing the dollar here early this morning. What was that about?
Well, there's talk. Bullard mentioned that there might be a rate increase, but really what the dollar is saying is they don't believe it. The other issue is there's a good chance that Europe will go to negative rates, which would make their dollar stronger, which is really exactly what's happening. So you get a lot of these rumors, and really I think that all they're trying to do is stem the tide of the actual equity markets first and try to keep away from the bubble that they're creating. But there's no chance they're able to do that. But you have guys come out and talk about this momentarily, and that caused a little bit of sell-off there.
When you have that big of a drop in the dollar, could that potentially cause let's say, a rush to buy U.S. ag export goods like grains and livestock, just to take advantage of that currency exchange rate there?
Absolutely. I mean, that's always a trade. You know, that's something you always look for because, again, that makes it actually cheaper when our dollars drop. So that is something that you would look for. But, again, right now you see markets that are just kind of churning. So we're going to see how this plays out. It needs to be more than a one-day story. But actually, obviously, some professional arbitrageurs probably already took advantage of that movement. But overall, we'll see how it plays out over the next 2 days. If this continues, then I think we will see a lot more action here. And that's basically what I'm looking for in the longer term, is some of this other outside garbage to resolve itself, which will bring new money into the commodity markets.
We were talking earlier about head fakes in the grain market. What about in the cattle market? We're seeing it there too, aren't we?
I thought cattle did exactly what I expected it to do. And last week I said that I thought we'd see feeders in the August go to 151 and fail, which they did. I thought that the fats would go up and fail, which they are. I think this is a great trade that we're looking at. I think using October, in October fats, I think 112 is a great area to try to step back in now. This is exactly where I was looking, 112 to 113. So I'm now looking to be an anxious buyer. I was a buyer before. As we rallied up, we got to a perfect level where we wanted to see some selling, and now I think we look to be buyers again. The October feeders, 142, I think, is just an outstanding place to jump in here. So I'm looking to be a buyer. I'm very bullish this space. I'm looking for levels. I have certain objectives. We met my upside. Now we're going to meet my downside. So now I want to look to be a buyer. And I think just to stop the hogs, I think the hogs have found their bottom. I think we finally saw it in October at 58 and in December at 54. You want to look for any spot, any reason now to buy hogs. I think you want to be a buyer down here at these levels now.
Interesting. All right. So October lean hogs currently up 8, trading at 62.58. December is up 8 as well at 57.10. The deferreds are all just a little bit weaker. We'll go back and catch the cattle. Let's go to live cattle futures here and see what the trade is doing. On the October contract, we're down $1.33 right now at 112.65 per hundredweight. And we have the December down $1.28 at 113.85 per hundredweight. Way over $1 off of our earlier high now. We're only 30 cents away from our low of the day. And looking at that feeder cattle trade that Todd was just talking about, here we have the September contract at 145.92, and that is down $1.16. And we have the October contract on the feeder cattle down $1 at 142.88. Wanted to quickly run through the latest beef cutout values and the pork carcass cutout values from yesterday afternoon, according to USDA. Well, they were supportive on the beef side. Choice cuts were up 48 cents at 201.67. We had selects 56 higher at 194.18. Now, if you look at the pork side, on the cutout values yesterday, we were up $1.71 at 76.47, so you would think that would be supportive more so to the futures trade, but we have had quite a run for a couple of days. Todd, as always, thanks for the comments. Good to visit with you, and always interesting perspective. Wish you the best today.
Great, and congratulations, Bandit. Take care.
All right, thanks a bunch. Todd Horwitz, he is with BubbaTrading.com, and